first off, we do see these Wall Street swings on what's coming out between U.S. and China. Why is this still, just remind everybody, why is this still the most important global economic relationship in the world? Or is it starting to kind of change a little bit?
Well, they are the two world's biggest economies. They are, of course, completely interlocked with each other. China is the world's biggest manufacturer, but of course, America is their biggest customer. It's the biggest consumer market in the world. So obviously, the trade tensions between them do spill over to everybody kind of caught in the middle of that in terms of supply chains. And that's what we're kind of seeing some reaction or some response now to the rest of the world, that even if your starting point is that, yes, we'll always have to do business with America because the consumer is so powerful there, trading partners are kicking tires and hang on a sec, who else can I do business with? How else can I diversify my markets? China's looking around, say, buying more agricultural produce from South America, as we know, but also its exports are going gangbusters to parts of the world other than America. And then those other countries in the middle are saying, you know, who else can we start doing more trade deals with? They're accelerating trade negotiations, they're accelerating ways of doing business with each other, looking for new markets. So it's very early stages, but that US-China trade war is starting to poke some change in the global trade system.
You know, I mean, I think the question is, the question that J.D. Vance probably doesn't have an answer to, can China be cut off from U.S. trade longer than we can stay solvent? Because the rare earth minerals that they have, we cannot get in size from anywhere else. And we're not going to be able to process them here, to refine them here anytime soon. So, you know, Meredith Whitney, in a note on Sunday, said, aside from the massive dependence on the U.S. industrial complex for these rare earth metals and magnets, the U.S. military is 100% dependent on them and nearly depleted of its reserves. So, I mean, don't we need them more than they need us right now?
Yeah, I think we're all at a point now where we are fully aware that if there is a vulnerability in the hawkish trade stance that the US is taking on China, it's on rare earth supplies. China is the one digging them out of the ground. China is the one that's taking on the refining risk there, the environmental risk and the costs associated with it at a scale that no other country is doing, and that's why America and everybody else is so reliant on China and getting those minerals out here. And that's why China, of course, it's well aware of its leverage. It's floated those export controls that it did last week or the week before that, of course, have sent shockwaves, not just through the US, but the rest of the world too. And China's making it clear that it's in control of these. Now, this is a policy error, though. If you go back maybe 15 years ago, there was a discussion around rare earth supply at that time. There were other options on the table. It's not just China that has these minerals. Other countries could have put money into the ground and put the money into the resources and the facilities needed to extract these. There are some companies in the US that are talking about or trying to get off the ground at the moment in doing this. But the point is, we're at a stage where China has a grip and a lock on the system to the point where everybody else is years behind. It will take a long time. And
well, it's not just getting them out of the ground. And I mean, I talked to industrial CEOs who do business globally and have told me, look, we've seen the refining process in China, and it is horrific. It is the kind of environmental risk that American voters just would not be willing to take. So no one else can refine them at these levels, at least with today's methods, without sacrificing like a portion of humanity. So we're not going to do that, are we?
Well, and that's entirely right. Environmental risk is a big part of the equation, Matt. But there are some companies, by the way, including some in the US, who are looking for cleaner ways to do this. So, but obviously nothing like on the scale that China currently offers. But other countries as well are coming to the table. Pakistan, for example, is floating itself as a potential partner for these minerals for the US. They can be sourced from other countries too. That's why Argentina is in the mix at the moment when we talk about the support that US Treasury is offering Argentina. One of the reasons is because of the minerals that Argentina has. So, but yes, the point is that no one's doing it on the scale that China is right now, and until that changes, China has leverage over the rest of the global trading system.
Hey, I want to go into your story that looks at global trade flows, and you look at what shipping companies are seeing and some of the changes. But there's a quote in the story, an associate professor of economics at the University of California at Davis, Ina Simonoviska, and it says this individual saying it's very clear that we are redrawing the map of international trade. We're going to see a lot more bilateral trade agreements between countries and subgroups of countries. She predicts this. What does that mean for for economic growth, for individual countries, and for the global economy overall. Do we know anything? Is it good? Is it bad?
Well, it's early stages, but we are seeing signs now that countries are looking at accelerating trade negotiations with each other and signing deals with each other. Now, the European Union is one example. They've finally gotten that deal signed with Indonesia. They are getting that big trade negotiation with South America, Mercosur, off the ground, trying to get that ratified. Other countries are also looking at doing business more with each other, like New Zealand and Switzerland and the UAE are among a group who've gotten together in this kind of a loose trading agreement that they've pulled together over recent months. And the point of all of this is as I said at the start, it's nobody suggesting the US is not the world's biggest consumer market and that they don't want to do business here. That's not the point. But they're seeing the tariffs going up at the fastest pace since World War II. It's more complicated, more costly for some of the businesses who want to do trade with the US, and they're asking what else can they do to diversify and mix up their supply lines and their markets. And we're seeing it in Peruvian fruit farmers. They're looking for new and alternative markets. In Lesotho, they're looking for alternative textile markets, maybe in Europe and in Asia. So, as I say, the tariff wall, when it's gone up on the US side, it's not about countries not wanting to do business here, but they are certainly kicking tires on where else they can diversify. And that's what these trade negotiations are getting a shot in the arm, as one of the professors quoting the article said to us.